And I'm excited to have this is our weekly home buying seminar with my sidekick, Patricia Castillo. Say hi, Patricia.
Hi, everybody. Welcome to our call today.
We do this every week, Wednesday at 5 p.m. Pacific, 8 p.m. Eastern Time. And today we have a special guest, Gustavo Segura, who's going to talk to us about lending. Gustavo, welcome to our call today.
Thank you very much for having me. Thank you. Looking forward to this.
I know you told me you're down the OC behind the orange curtain. Give us a little background on you personally before we get started. Where'd you grow up and how'd you get into lending?
Yeah, so I was born in Mexico, and when we moved here, I moved to Huntington Beach and grew up here. I went to college here locally, Cal State Fullerton, go Titans, and just kind of made a life out of this area. You know, really never lived outside of California. There's a lot of places here in California that, you know, are very attractive. So just kind of always made my life here. Started back in 2002 in the industry as far as doing mortgages and working in the mortgage world.
So I just want to say my favorite uncle when I was growing up lived in our house and was the first graduating class of Cal State Fullerton back when they were in trailers.
Wow.
And my brother was also a Cal State Fullerton alum. Quick trivia question. What is the name of the mascot for Cal State Fullerton?
That's what I was thinking. It's an elephant. And God, what is it?
One day I was at Denny's in Cyprus, and a person walked in dressed as an elephant, took off the hat. I met her, Tuffy Titan.
Tuffy, there you go.
Tuffy Titan.
Yeah, and one of my best friends' his name in the baseball field. There's a Hall of Fame, a Ring of Fame, I think it's called, with guys who are like all Americans in the baseball team. And one of my friends on there. So. Cool. So you're legit Orange County. Okay. You have even from Mexico, you're legit Orange County.
Yes.
Huntington Beach is about as legit as you get. Cal State Fullerton, about as legit as you get. So let's talk about lending. You are currently with Sendero Home Loans?
Yeah. So it's my own broker shop. After many years in the industry, decided to go my own, trust in myself and really deliver the experience that I wanted to the buyers. I really wanted to connect with agents in the way that I wanted to and be able to help buyers from start to finish. It was no more of this passing on, and I wanted to really help them from the beginning.
So as a broker, what advantage does that give to the customer rather than being with a bank?
Yeah, so it allows me to really help them again from start to finish, no matter where their loan lands. It could be, lender A, B, or C. I have them through the whole process. So if we go through one lender, it doesn't work out, we can move to another one. They don't have to get their credit pulled again. They don't have to deliver any documents to somebody else, have to worry about where they're uploading all that information. And then from there, it's just about the wholesale side of the business, which gives them a rate improvement. So different cost structure, and it really helps them to get the best deal they can from the get-go. So we do a lot of comparison shopping for them.
I was a lender before. I don't know if you know this. I was a lender before. I was a real estate agent for about 15 years. I was a salesperson, manager, owner, broker on my own. So I understand, and there's different, depending on where your market is, there's advantages and disadvantages of both. It's a very competitive market.
It is.
And so as the person working with the customer, the originator, you want to be able to give the best service and price to your clients. You have to stay competitive, right?
Yeah, exactly. Stay competitive, make a differentiator for yourselves. There's a lot of focus a lot of times on price, which of course it's a big deal. It's a big purchase item that's going to make the big difference. But also there's about that trust that you develop with someone and then being able to help them through and explain them. Because at the end of the day, when the borrower signs off on those documents, they don't want to feel like, did I do it right? Am I going to get a surprise shock, payment here? I want to make sure that they understand everything. So it really helps me feel secure that the next transaction is going to come from them. It's going to help build a customer for life.
Fantastic.
Yeah.
And so, it's a competitive market, and I'm sure one of the advantages is you have a wider net than if you work just at a bank like a Wells Fargo or Chase.
Correct.
But I also know within that, there's probably a particular niche or two that you focus in on, or you think you really have a competitive advantage. What would you say is the one particular niche or two that you really create extra value for your customers or for the real estate agents that you work with?
Yeah, so definitely, like you said, conventional FHA tend to lead the way, right? But I do live in an area where, Southern California, we have some local military areas that you can get that VA customer, help them out, make sure that we can get them all the benefits. And throughout California, I've been able to help veterans as well. And it's something that those areas, those markets are really what I'm focused on. A first-time home buyer as well, coming into a low down payment in this area really helps out. You know, these prices are high. So when we're talking about a 20% down, that's a lot of money. So is there programs that we can deliver that can be 3%, 3.5%, a CalHFA where they will help with a down payment assistance? So what are the things that we can do to get someone into a home that then now they're in the game and then they can work on the next 5 years to get that move up home and continue?
Yeah, I know one of the things in my career was I was in mortgages for 14 years. I worked for 15 different companies. I never changed jobs. They kept changing around me, and partially because the market would change one day.
Yeah.
And my niche was mostly conventional as Fannie Mae, Freddie Mac.
Mm-hmm.
And the lender would get bought. They go, oh, great. Now we do a lot of FHA, and I said, well, that's great, but I don't do them. And they wouldn't do the conventional loans as well. And then another company did a bunch of jumbos. They didn't do conventional loans. So it really depends on your customers being able to execute and deliver to them the service that you want to give.
Exactly.
How do you get your loans processed, and how do you interact with the wholesalers that you work with? You have a customer package. I'm sure you do some of the process, and at some point you turn it over to somebody else. How do you handle that?
Yeah, so actually, I help them all the way through the from start to finish. I mean, I am looking over all the documents. Now, the good thing about working with these lenders is that we have technology nowadays. So the technology aspect is
translation. Bill, you're old. You're doing loans before technology. You're right. Okay, go ahead.
No, yeah, it's like
Really well.
no longer stacking applications or loans and doing checklists, right? Everything is built into our system. So there's a lot of safety checks in place. The portals that I have are bank level security, so that when you're uploading documents, this is very secure. I always tell people, don't email me, don't text me your social security number, information like that. Let's do it all through our technology portal. That way, everything's instant. And then that's where I deliver the loan. I work through the wholesalers that way. I'm able to get updates real quick. So there's a lot of technology that goes in place now. So mortgages is not it's not a great product, right? Like a sexy product, but it is something that we've been able to add technology to it, to make it easier and to make it less of a burden on people to get documents, to get verification of employment. Now we can do that electronically. So if I can do that electronically with your employer, then I don't need to collect check stubs. I don't need certain documentation. So there's a lot more technology that's coming in that's really helping the industry out.
Yeah, now, Patricia and I both happen to work for a virtual real estate company. We have 83,000 real estate agents nationwide. We don't have a corporate headquarters other than in the cloud. So if there's anybody who's on board with this, and I'm looking around my office, paper comes in, but I don't keep any paper anywhere. So I'm on board with that. Patricia, you have some questions for Gustavo. Now, I want to, before I ask you that, Gustavo, I presume you're from Mexico. Speak Spanish?
Yeah, that was what I was going to mention as well. The other part of my niche is helping Spanish buyers. Now, they'll feel comfortable to some level in English, but then maybe they want to sit down with me and really introduce another family member. And that could be, a cultural element of, let's make sure that the family is behind this process, right? So I'll go through and I'll sit down from beginning to end again, and I'll go through and explain what's going to happen, what each cost is, and really what this means for them, and of course for their family as well. So it's been a big plus for me, being able to keep my language and my heritage, and then be able to help someone.
Yeah, because they may understand English, but they feel more comfortable in Spanish.
Exactly.
Levels.
Exactly. There's just that familiarity that really brings when you're talking to someone. You feel a little bit more comfortable too. I realize to ask more questions. In English, they may understand it, like you said, but then it stops them from getting that additional question. Where as soon as we start going through the process in Spanish, they feel more secure. They ask that question. They don't feel with any hesitation, and they leave the table feeling a lot better. Yeah,
my Spanish is good enough. They feel sorry for me, and they'll sign the papers just to get me out of their house.
just to stop. Yeah.
Just be done. Just this program must need this loan.
Yeah.
Patricia, questions for Gustavo?
Yeah. So, we were talking earlier today, and I know we've communicated a few times. And one of the things that I like about your service is that this, you know, one of the, or I should say, one of the things that sometimes home buyers can do is apply and get at least 2 loan approvals, right? But with you, it's just one application, a one-time process of submitting the documentation and then getting more than one scenario for a loan approval and for a quote, right?
Exactly.
So,
Yes.
I know that you and I were talking earlier about, you know, sometimes buyers are really worried about having their credit pulled. And so that they want to get more than one approval or quote, but they don't want to have their credit pulled multiple times because they don't want their credit to be dinged and their FICO to get lowered. So you and I were talking earlier about a hard pull versus a soft pull. And I think that was something that was, you know, really important for us to talk about today so that buyers that are thinking about maybe starting the process can understand the difference between a hard pull and a soft pull. So do you want to share a little bit about that?
Yeah, definitely. Thank you for that. And yes, every customer, I give them 3 quotes. So there's 3 scenarios. And like you said, I get one application and I take a look at what's going on out there from the different lenders. And then I deliver 3 different quotes for them. So there's different, from a different rate, different costs, different payment, just so that they can see what works for them. Are they okay putting down more money? Or they want help on the down payment. And of course, what does that mean for rate? And that way they can see and they can start selecting the process that they're going to go down. So later on, there's no hesitation of, you know what, that down payment is too high. And before that, of course, I go through the credit review, like you mentioned. I hear a lot about customers just not wanting to pull their credit. You know, they hear a lot about that. Protect your credit. It's going to ding it. It's going to ding it. The reality is that they can do some shopping around. It's only going to count one. But I tell people, I said, look, let me first take a look at what I see, and we can get a better idea of your qualification by using that soft pull. I'm able to then understand a little bit more and give them a better assessment of what's happening. You know, that way they don't have to go down the path of unnecessary paperwork or time commitment. You know, and it doesn't hurt their credit score.
Okay, good. I love that. That's really good to know. And typically, how long are those approvals good for? Let's say you issued maybe 3 quotes. How long are those usually good for?
So the cost, all that, you know, this market is changing very fast.
Right.
So typically, you know, they'll review that. I tell them it's about 8 to 9 days. But this market has been changing so rapidly that a lot of times, you know, I give them a call. As soon as a lot of things change, I give them a call right away. And I say, look, the market's moving. It was an 1/8 change today. You know, we've seen the last 6 months, what kind of crazy jump we've had. So, and the key to just getting to that is just communication. If I can get to them quickly, let them know, that way they're not going to be shocked when they call me back in 5 days and they're like, okay, I'm ready to move forward. It's like, well, we've had a couple of changes.
Yeah, and then the surprise comes in.
Exactly. You know, the Fed announced this, the market responded this way, and because of that, we're a 1/4% higher. So as soon as something happens that's going to be drastic like that, I'm calling them and I'm like, hey, you know what? I gave you that approval. It's going to change. Let me walk you through the changes and they can understand.
Right. And I think that's so important because when a buyer gets an approval, they're just holding on to that.
Exactly.
And they're not really paying attention to, you know, the interest rates like we are, watching them daily and knowing exactly how it's going to affect the approval. I've called a couple of lenders that I've dealt with in the past where they issued an approval and then I've called them to follow up and ask them, have you refreshed this lately to update according to the current rates? And you know, they're like, well, no, let me work on that for you. And then I'll get that over to you and the client. But I really appreciate that you stay on top of it and you take that initiative to reach out to the clients and let them know how their information has changed and how the market's going to be basically changing their approval.
Yeah, I think, you know, the reason why, coming back to the reason why I became a broker is the level of service, right? So I know I may not be able to do 500 loans a month, you know, all by myself, right? But I know the number of loans that I can do them my way and be able to help someone from start to finish and really help connect with them and build that relationship and that client for life. So.
Right. Yeah, absolutely. So I'm sorry, did you have a question, Bill?
Go ahead, Peter, you're in a roll.
I
I'll
was,
stand back.
I know I was just gonna say, we were also talking earlier about the myth about thinking that you need a 20% down payment.
Yeah.
So, with conventional, you don't need a 20% down payment. In fact, you could put down a lower down payment, but you also would be responsible for paying PMI amount, correct?
Yeah, exactly. So, 20%, of course, will be the best thing. Lenders out there with 20% down, you don't have to have that mortgage insurance payment, which is great. No one wants to pay a little extra, but it could be anywhere from $150, $300, whatever. It depends on the loan scenario. You're going to have that mortgage insurance if you're putting down 3%, 5%, anything under 20%. That helps protect the lender in case something happens. So they're going to have that mortgage insurance on there. So when I do these scenarios, depending on where they're going to be at, I bring that up as well. I give them the mortgage insurance payment and what is that used for and why they have to pay it. Of course, with properties and equities going up, they can certainly refinance out of it as soon as they can get to that 80% loan to value, they'll be able to drop that off. FHA is a little bit different. Depending on your down payment, you'll have that mortgage insurance for life, or you'll be able to also refinance out of it or pay it for 11 years.
Just today on this topic, I was listening to Dave Ramsey, who I like a lot, but sometimes I think he gets a little up on his high horse and he really insults private mortgage insurance and always says, well, it doesn't insure you, it just insures the lender in case of default. And I thought about that. I said, it's funny, if you called Dave Ramsey and said, how much is your program, whatever it is, $500. Well, that's just to pay you. That's not to help the customer.
Yeah.
The mortgage insurance is really reflective of the higher risk. It's a higher price that a customer pays if they're not putting 20% down. And we call it insurance. We could just say price adjustment. We could say risk adjustment. But we do use a third party as an industry or as a economy.
Right.
It's called private mortgage insurance, but really it's reflective of the risk of the loan that we all understand when there's lower loan to value. And so it's not to say one's good or bad. There's different risks. You as a lender have different risks, I'm sure, adjustments for FICO scores and for other factors, ratios. Some lenders would do some loans, some won't. The ones that will maybe have a little higher price. So I think I wouldn't necessarily think that mortgage insurance is a bad thing. It's just
Shut up.
Okay, so it's just
Shut up.
So there you go. There's an idiot on, and he's now
And
going to be kicked out and removed, and we're going to report him, and he's gone. But the point is that it's just a cost factor in the mortgage. It's not necessarily to be avoided if you can't avoid it. If it gets you in the dream house for you and your family, and it helps you make equity in 2 or 3 or 5 years, good for you, and enjoy that.
Exactly. And that's what that's the calculation too that I show them. Say they're paying $200 a month on that insurance. Well, for the next 2-3 years, what does that equate to as far as the equity they're gonna be able to get into the house and grow and being able to have that opportunity to have a home where they want to go to the school district that they really want to be with. They're gonna start building those moments, right, with their family. So it's just part of that cost, like you said, and without it, they would have to wait until they had a much higher down payment. So that if that payment was 20%, well, how much extra is that going to be? That could be like 80,000-90,000, where the private mortgage insurance was only 8,000-10,000 over the next 3, 4, 5 years. So it's a big difference.
Yeah, absolutely. That's why I bought my house with the FHA loan. 14,000 down.
Yeah.
And I got rid of the PMI after about 2 years.
Yeah, I think it's, once you get in the game of being a homeowner, there's a lot of different things that happen and a lot of opportunities that open up as well. You're not marrying the loan for the next 30 years. There's a lot of numbers out there as far as the average homeowner is going to refi after 2, 3 years, 4 years. They're going to move and sell the house in 5 years. So it's about what works for you right now. You're comfortable. You're getting that dream home for this moment and really to help you get that. So it's not a bad thing. I never tell anybody that's a bad thing. I just show them the numbers and being able to say, look, if you don't want to pay mortgage insurance, do you have an extra $60,000 or $80,000 to be able to get the down payment to 20%?
Right.
So,
and again, it's just not necessarily a bad thing. It just is what it is.
exactly.
It's the price to pay that may or may not make sense given your finances, and the monthly payment may or may not make sense, but for many people it does. I just feel like he was so negative on it that it really wasn't, it's not a logical response, it's more emotional. And everybody gets paid in this economy. I mean, there's nobody doing anything for free. There's no lender doing it for free. Gustavo this isn't charity work for you. It's not for me or for
Right.
Patricia. But there are certain costs that are reflective of the risks, and that's what you have to pay to get the job done, I guess.
Yeah, exactly.
Good. Any other questions, Patricia?
Not at the moment. I think we've covered quite a bit today, and you've been really explaining everything thoroughly. So I really appreciate that. Especially with, home buyers. I heard the phrase before, nothing is obvious, right? And we do this every day. So it's really important just to be able to explain everything in great detail so that,
Yes.
there's a lot of information that's put out there, but also explanations behind it so that buyers can get the whole picture and really wrap their head around the lending process and the different options that are out there for, as you mentioned, conventional, FHA, possibly VA. Or
Yeah.
capital.
I have a last question. I'm sorry, go ahead.
Oh, I was going to say, there's no, we hear about that, there's no bad question, right? And that's really the case in this even more because someone's going to be buying a $500,000 home, $1 million. So ask away, I go through and I answer the same question, but it's okay because I don't want that person to feel like they're left wondering what's going to happen, because they didn't ask that question. So there's a lot of information, but it's what works for you for your scenarios.
I think that's the job, right? The job is to explain to customers what they need to hear. So I appreciate that. I don't know if you guys are watching, but there's this guy who I reported came back in, changed his name.
Oh, Harrison?
But no, well, that was the second time around with somebody else before. Changed his name, came in, and but I didn't let him talk, and he got a little frustrated. So we went in the video, and then I booted him out. We've locked the meeting. So just for those watching on the video on the YouTube or afterwards, the recording, you might enjoy the fact that we try to keep tight security. Sorry for the disruption, but it's also kind of fun to play with these idiots who jump into the calls and try to disrupt. The last question really I have, Gustavo, the worst thing I ever hear when I work with a buyer who's getting a lender is they'll say, oh yeah, I went on Lending Tree. I went on some website and chose the lowest price lender. And I did a video on this one time where I showed here's the market rate, and Lending Tree was quoting like 2% below. They were still at 3% when the rates were 5%. I said, here's I can promise you, you're never going to get 3% unless the market goes back down. You're never going to get it. They'll find some story to tell you why you didn't qualify, but you'll never get that loan. And I think that the other part that happens is the frustration of lenders saying a loan rate is locked when it's not. And then it certainly is locked as long as rates don't go up. But if rates go up, all of a sudden magically that rate lock expires. And that's why we try to get people to work with a reputable lender like you that we know trust. It's going to be competitive. Yeah. And then when you lock in, once they were fully approved, we can then go shopping. How do you explain to buyers the process and when they should lock in loans and when they should be comparing rates?
Yeah, no, great question, because there's a lot of shopping that goes on there. And I tell people, I'm going to be doing what you would be doing, which is shopping for the different rates with the lenders. And then, I definitely encourage people to do that. But what happens is these big companies, they will advertise a ridiculous rate, and then they'll put on there, they're paying 2.5 points. And then there's origination fees on top of that. And it's the perfect scenario, 800 credit score, 45% down payment, so you're really, that's not for you. But you see that and you get very excited about it and you give them a call. And like you said, they'll find a way to get out of that. The rate lock scenario as well, I tell them, I go, look, nothing is locked until you see an actual document, which is our loan, our estimates, that you're going to be able to see that it's locked, that this is the rate, it cannot change. You have until 60, 90 days, 120 days, whatever it might be. So until you actually have something in writing, then you're going to know that you are secured from the payment changing, as we quoted. And that's something that I go through with them on video and as we deliver documents. So also, like you said, it's about making sure that they understand that I can say anything on the phone, right? I can say 3% and all these different things, but let's make sure we are professional. We're getting documents. If someone is saying that, then okay, email me, the quote. I want to make sure everything in writing, because as an industry, we have a lot of regulations, and that's why they're there, so that we don't just lie on a $1 million transaction that can cost someone a lot of money. So I make sure that I am very transparent and clear, and I tell them, if you haven't gotten this from another lender, what I'm about to give you, you can't believe it until you see it. Then you can compare rates against my rates, and I'll be happy to sit there and go through the loan estimate and be able to go through the cost and be able to say, oh, you know what, that is a great deal. You found someone that they are offering great rates this week. They have a different margin for this week, and they are doing really well. That's okay. I'm okay with having that conversation. But until we can actually go and look at the different loan estimates, then there's nothing that's locked and set in stone yet for them.
Now, we did get on Facebook a question: can you lock in a rate when you get pre-qualified? And
Yeah.
I think that's a customers don't understand the important distinctions: pre-qualified versus pre-approved, rate locks, and the rate lock is only as good as getting the loan. Can you kind of give us an overview on that?
Yeah, so definitely the pre-qualified is a very loose, right? You tell me you make $100,000 and you're going to put down 20% and you have $100,000 in the bank, and you only have 5 credit cards and it's this much debt. So it's like, oh, I think we can pre-qualify you on that. So it's very loose. A pre-approval, we're going through, hey, can you send me over a check? Let's run credit. Let's take a look at your liabilities. Now I'm actually confirming these numbers. And then we go through a process, which is an automated underwriting system as well, right? To add more validity to that pre-approval. So when we're going through that, now we're checking a lot of information to make sure that we can do this loan for you, okay? And then at that point, we can lock in rates. There's lenders that will let, wholesalers that will let us lock in for 90 days. There's no cost. There might be a little bit of an adjustment. Let's say, you're getting a 5% if you're going to get a house now, but if it's, 90-day rate lock, maybe it's a 5.125, so there's a little bit because of the risk, right? You're locking that rate for a longer time. So the lender's taking a risk on that, but there's no cost for you. Now, if you're going over 90 days, we can lock your pre-approval there over 120 days, 150, but there is going to be a small cost. Some of the lenders will do 0.5% of the loan amount as a cost. And again, for 120, 150, where is the market going to be there? So the lender's really taking a lot of risk and locking in that rate. So I always tell people, hey, we can do 90 days. If you're active and you're working with someone like Patricia, where you're going out there and you're shopping around, and every weekend or during the week, you're visiting open houses, then 90 days gives you a very nice security blanket to be able to be active and be able to submit that offer.
So if you're working with Patricia, you can lock in your loan. If you're working with me, you can't. Is that what you're saying?
Unfortunately, yes.
Man, that's not fair.
Yeah.
I get it though. I like her better than me too. Well, we went a little deep today. I don't know if we normally go this deep on the details, but really, this is the difference. I think that it's fun to look online and you see some fancy commercial or some you see companies that sponsor race cars or advertisements or arenas, but at the end of the day, it's the nuts and bolts of these specific details that make the difference in people getting what they want or not getting what they want. And you talk about differences of thousands or tens of thousands of dollars.
Yeah, exactly. Because, like you said, these companies, they're going to do 3, 4, 5,000 loans. So there's a formula to that. There's a formula. There's a way to fit the bars into that. And if it doesn't, you just kind of get passed on, and that's where, like I said, over the many years, different companies that I work with, large companies that had the race cars and the sponsorships and the blimps and all that stuff. I realized, there's a different approach for me as I was working with people to really help them and to feel like you close a loan and you're like, you set them in the best loan there for them. And you feel good, especially after everything that happened in 2008 and all of that. You definitely feel a lot better knowing that you help them as much as you can all the way through, and you went no stone unturned.
I have to tell you, my career, when I've gone to trade shows or expos or conferences, the lenders with the best free stuff were the first ones that went out of business. If you're getting business by handing out bags and pens and you hire models and fancy things, they're buying that because they don't have the relationship and the credibility And I think they put their energy into that marketing stuff instead of getting the rate locked, getting the customer pre-approved, getting the papers reviewed. That's the grind of the business that you do, but that's ultimately how we all get paid.
Exactly. It's like they attract you with a lot of, shiny objects. But when that goes away, what really matters is getting your offer accepted and then actually being able to deliver on that loan, right? And it's 14 days, 20 days escrows. Well, that takes a full team from our wholesale lenders that can do that to us and to me under helping with the processing and making sure that that all started in the first couple phone calls where we talked about what we can do, what the borrower is looking for, what their qualifications are. So we start on the right path so that later on there's no surprises and no broken promises are done.
I was just looking at my pen case. I have all kinds of pens from companies, and I don't think I've ever done any business with any of them. The nicer pens are always the worst companies. Sorry.
Yeah.
Probably I did have a last question. I know when we were talking earlier, I mentioned that this is being streamed on YouTube and also on Facebook. And so we have clients that are looking at the video and listening, and they're sometimes they're in other states. So outside of California, you're licensed in other states, correct?
Yeah, so I'm licensed in Colorado. I was licensed in 7 other states, but it just got to be a little too much. So then what I did is I just brought it back and I did California and Colorado. So yeah, so definitely anybody in these 2 states can help you out. Residential loans. There's investors as well that are looking and they have a different set of guidelines that we need to do. But guess what? I got relationships with private lenders, that they can do fix and flips, ground up construction. So there's a lot of other customers that I also help out as well.
So if anyone get hold of you, your website is senderahomeloans.com. There's a
Correct.
picture of your handsome face right there in the middle.
There it is. It's me.
Phone number?
So yeah, senderahomeloans.com. And same thing on Instagram is Sendera Home Loans and on Facebook as well.
And phone number 714-334-4563. Call or
Correct.
text for info. And you go online and there's this contact info down in Rancho. I know there's a Rancho Mission Viejo. I know Mission Viejo. Where's Rancho Mission Viejo?
Yeah, so it's just a little bit, a couple miles more south, right next to San Juan Capistrano.
It's the bougier part of Mission Viejo.
Yeah, so there's just a lot more. They added the Rancho part to make it that way. Yeah, there's a lot of development. There's a lot of they're expecting like 10,000 homes here over the next 15, 20 years. There's a lot of development going on, builders. So there's still a lot of building going on here.
Fantastic. Well, Gustavo, thanks so much for joining us today.
Thank you. Thank you for having me.
And Patricia, always fun to have you. And even though Gustavo will only help Patricia's customers, not mine, I guess you need to call Patricia if you need something. So before we run out, I'll give Gustavo's info. Patricia, if someone want to get a hold of you, how would they get a hold of you?
Yes, my cell phone, 323-365-9909. And I may answer it more often than Bill.
I'm sure you do. I'm sure you do. I'm on social media, Bill Gross EXP, on Facebook, Instagram, and YouTube. And this is being streamed on our YouTube channel. Gustavo, thanks again. Patricia, it's always fun to be with you and see you.
Thank you.
You guys have a great week. Everybody here have a great week. If we can help, call,